Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this Sunday, this last week of the month, last week of the quarter, and last week of the first half of the year. So, pretty important week in which we had a lot of volatility, a lot of choppiness, and finally on Friday, we saw a lot of concerning moves. We are going to review what happened on Friday and why we have to be really careful starting next week, because not only economic data it's pointing towards a little bit of softness, but also concerning parts on developments in the US presidential race, and also cautioning on ahead of France elections today. A lot of positions were changed due to the aftermath of Joe Biden's and Donald Trump's debate. Biden's performance fueled the speculation about Trump's chances of re-election, and I think that started pretty a lot of pretty big sell-off on Friday, and the S&P, the Nasdaq, and a lot of signals were coming up saying, "Be careful," because during the weekend big investors, big participants don't want to have open positions. And we are not only talking about stocks and Nvidia and the AI FOMO, we are talking about macroeconomic things, re-election in the US and also France elections, because the far right has real chances of winning the elections, and that would change everything, not only in Europe, but also in the US. So let's start reviewing the economic data real quick, the big data for the week, the last week, this week, last week of month. Remember that Monday we got Dallas Fed Manufacturing Index coming in negative as always. That's really good. And the Tuesday Case Shiller Home Price Index came in as expected. So basically, year over year prices continuing going higher, 7.2. The Price Index 6.3, coming from 6.7, still pushing higher. And if we continue seeing these prices, inflation is not going to be under control, really. Consumer confidence came also on Tuesday, showing strong confidence from the consumer. We were expecting 100, we got a little bit higher. And also manufacturing indexes and also Fed services revenue and index came lower than expected, all in the negative. This is good for inflation, but still mixed sentiment due to basically the price home index. On Wednesday, we started seeing MBA 30-year mortgage. We reviewed that in our video, that applications are still really low, 0.8, because the mortgage rate is basically at 7% still. New home sales, look at this, month over month, minus 11%. That's huge. And on Thursday, we started seeing big data coming up. Durable goods, 0.1, really not as expected, higher than expected. We were expecting negative. And GDP growth rate, this was the final reading for the quarter over quarter, came as expected, 1.4, coming down from the 3.4%. Prices 3.1, huge increase from 1.7, and as expected. Then the core PCE price index also pushing higher, 3.7, coming from 2% and higher than expected. And corporate profits minus 2.7. So we have big price index, we have big core piece prices, and we have lower corporate profits. And that's a really big miss for Wall Street and the markets. Finally, on Friday, the big data. We got PCE price index month over month coming at 0, flat, lower than the previous one, and as expected. That was a move in the right direction. Price index year over year 2.6, coming down from 2.7, and as expected, another win. Core PCE year over year 2.6, coming down from 2.8, and as expected, another win. And core PCE month over month 0.1, coming down from 0.3, and as expected, another win. That's huge for the market. We saw a big rally on Friday right at the open. But I think once people digested what was happening, the day before with the growth rate and price indexes, and also personal income was also good, 0.5%. We were expecting a little bit higher, 0.4, so more money for the people is good for profits in the markets. But personal spending came lower than expected. We coming up from 0.1, 0.2, but we were expecting a little bit more. We want this data to push higher for corporate profits to increase. And also, Chicago PMI 47, really big push. And finally, I think this was the bulliest data of the day. Consumer sentiment came a little bit lower, but higher than expected, 65. And look at these 5-year expectations. All came as the previous one and lower than expected. 3.1, we caught 3%. And long-term inflation expectations, 3%. We were expecting 3.3, really push lower. So what happened in the market? The first thing that we need to see is that on the NQ continuous chart, we have a big rejection candle on Friday. Let me just show you the week. This was the week. And as you can see, we have the initial continuation lower on Monday. On Tuesday, we start seeing bullish price action, and we waited for the data. But we pushed and failed pretty hard. So these two candles are pretty telling. We have big volume and we are under the point of control here. And that's quite important to understand, because if we change, for example, to the 1 week, we are starting to see two rejection candles and this weekly fair value gap being tapped. We need a reaction next week to really see continuation higher. That might happen on the technical side of things. The monthly looks bullish because we basically held this zone the same as on the weekly and we are pushing higher. But the daily is starting to show a little bit of concerns, and that coupled with the fact that initially dollar spiked down. So we were pushing hard, but then slowly grinding higher. The 2-year yield pushed a little bit more than expected. This is consolidation and we are above 4.7. But look at the 10-year. The 10-year got 2 big days this week and we pushed pretty hard. We found a lot of buyers, and this divergence between the 2-year and the 10-year, the inverted yield curve, did a huge push during this week. We were on a downward trend and we were kind of coiling until we saw the CPI and the PPI. But then this week, a lot of concerns arise from the US presidential election, Biden's performance, and also Europe's France election. So we are seeing a lot of things that are under the hood really going bad. This is not only stocks that were selling off the last part of the day. The inverted yield curve, remember that it's going to uninvert at some point and reach 0% up here. And really the issues will come when this uninverts. We are seeing a lot of momentum to the upside, and we have to still watching yields. This is quite concerning. This move is not good. And also on the NQ, the last day of the day, the last day of the week, the last day of the month, we were during 2 days, we were just chopping around and consolidating. And look at this move during Friday. Was really beautiful, the trade that I got, but gladly and thank God that I stopped work, I stopped trading, because this was the pre-market low that everyone was watching once we saw the data. So we pushed the data and we sold off hard to really cut catch these lows. And basically during the open, we just squeezed higher. Look at this projection on the move, because I was projecting from this high, from this low to this high in this range, a fib retracement, fib projection, standard deviations from this manipulation move. I thought that this was manipulation, and funnily enough, look at where the projection ended up. The 2.5 and 2 range were down here at 20,000. We got this huge move to the upside, and I was quite bullish because I thought, okay, we are going to most probably get these traders. And you know my setup. My setup is down and spiked up, crossing the inverse fair value gap and bouncing from a bullish fair value gap. This bounce was my trade. The stop was, as always, below the candle that made the bullish fair value gap. The entry is the first high tapping, and 4.14 risk reward ratio with 24 points of risk, $400. This is more than I would like to see, but it was the potential to really see big spike to the upside because the data was good, and also all-time highs potential made me just hold this trade. I was really watching this bounce, this push into this pivot, and then this zone. I was about to really take it off after this consolidation here. I just put break even on the trade and hope for the best because I really trusted. I really had confidence on this trade, and it really worked for 100 points. 2,000 bucks on Friday. It's, for me, it's overperformance. That's pretty crazy. Fridays are mostly, for me, are capital preservation days, and having these kind of moves are pretty crazy. I was quite bullish. I was watching the pullback in other parts of in other accounts that I have, small accounts, so playing micros. And I was quite concerned when we just upped the previous all-time highs. This was the dashed dollar, the dashed orange line was the previous all-time high that we have. Let me just show you, because this was on regular trading hours, and this all-time high was in extended trading hours. So tapping these and not tapping the regular, the extended trading hours was a little bit of a surprise. I was watching this consolidation into these fair value gaps here. The tap on the golden pocket, I was really watching this move, and it just kept going lower, 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 where I was like, what the hell is happening? Consolidation, and it kept moving lower and lower and lower. And we ended the day from high to lows minus 1.52. That point up here, we were 1.17. And we ended the day minus 0.56. What the heck? Look at this. This was weakness like crazy. Finally, it tapped the liquidity, it bounced, and we got here liquidity that we never tapped, and we basically saw shorts recommitting and just weakness after weakness after weakness. Quite concerning price action. If we check Apple and all the big tech companies, they are all failing. They are all trying to go higher, but making a lower high in the daily. Microsoft minus 1.30, Apple minus 1.63. Tesla has its own catalyst, so basically also in the green, but It's just indecision candle. Amazon minus 2.32. Consumer discretionary being beat super hard. Google minus 1.84. Nvidia minus 0.36. This looks like the typical H into bear flag, so be careful, Nvidia. Meta minus 3%. And I mean, this was quite unbelievable. XLY consumer discretionary was minus 1.11. If we compare that with consumer discretionary, XLY versus XLP, we are still in the middle of the range. But the good thing was that small caps were in the green. They tried to gap up. They actually gap up, but then slowly but surely went lower. But look at this end of the day buying. So this is good because we are seeing overall breadth, RSP, holding this pattern, holding this coiling and the range. So we are still trying to find a bottom, and the indicators for trend, momentum, and long term, the percentage of stocks above the 20, the 50, and the 200, you know about this, are ticking higher. Actually, there was a lot of momentum during this week. It came from the lows of 30 to almost 50% of stocks are above the 20-day moving average. So we are seeing inflows in small caps and the overall mid caps for this new quarter, but we are seeing the opposite on the Nasdaq. So that's quite concerning. Again, on the NQ, we are seeing volume started to increase up here, 2 rejection candles, and the point of control is right here. We are below that. We need to see this level. We need to see, let me just adjust and change for this. This is basically our, let me just clean up a little bit and do. So this is done. It's done. We took that. Finally, we took this. I'm just going to clean up real quick to do the forecast. And let me tell you, I'm quite bearish starting the new week because of what I've explained. I can see all these lows, I can see them being taken right at the open on Monday. Because after this big sell-off, let me just show you something. The open interest in the S&P on a down day is positive 24,000. So on a down day, if we increase open interest, obviously these are short sellers. And the sad thing is that the NQ got wrecked. Negative on a down day was basically longs being liquidated. Longs being liquidated and closing their positions, because I think everyone was watching NQ for a nice push on Friday and they got wrecked. Look at the open, look at how we pushed hard, and then all these people was basically liquidated. So I'm quite bearish, not only because it was a big sell-off on Friday, it's also because dollar is holding, yields are pushing, inverted yield curve are pushing. The only thing that is good, that gives me hopes, it's that banks were performing pretty well due to basically higher yields. Look at these numbers. KRE, real estate sector, 3% in the green. So financials were pretty good. Small caps, we are seeing a little bit of momentum, but still, we have to really follow price action. And on the 1 hour, we can see the failure that we got here. This is a pretty brutal candle. We pushed all-time highs and we failed. So this is going to be in everyone's mind as the last line. If we cross this, I mean, forget about shorts. But right now, this move, it's quite crazy. So the expectation is basically continuation lower. We have a reason why we want to go lower. There's a reason of these lows. There's also a reason of basically on the 30-minute chart, we got this inverse fair value gap. Let me just clean a little bit here because that was quite choppy. But basically we had on the 1 hour, we have a big rejection. There's a lot of choppy, inefficient price action. So I think we are going to see repair and continuation lower after this candle. One thing that I would like to do is on the 1 hour, on this big fat candle, I would like to just have here basically the 50% or I don't know, for a lot of, I want to see that in here, but only here. So if we start pushing at some point this 50% retracement on this week, I would be bullish again. And there's no structure here to lean on for a push higher. So right now I want to see lower before turning again bullish. So how can we do this? Well, I think these levels are going to get hit first. There's a 1 hour fair value gap here that got basically respected on here, and we broke this trend. So this is the first sign. We have a lot of liquidity down here. We have these two. We have that, and we have, this is the 1 hour that I think we are going to see taken like early Monday. And then the first sign of real weakness would be down here below 20,000. We are below 20,000 already, but below this 19,800s, below this it starts to really open up. On the 4 hour, we can see that there's structure down here that got never taken. This was the CPI move, and we can remove this. This is a lower high. So we have this wedge taken down, and we might see lower this way. There's also a fair value gap here that most probably is going to be taken out. And look at this 4 hour fair value gap push. This is higher time frame pushing lower. This is a 4 hour fair value gap. We usually don't track this, but this structure is quite bearish. So it's quite important to really understand that after Friday's price action, we need a lot really be bullish. And I told you, the 4 hour is telling a story of higher time frame, lower high into a breakdown, and there's a lot of structure down here. The first level I would like to see hold is the same one I was hoping for to be long down here last week. 19,600s. So basically around this zone, 625, 600, 575. This is the first area that I would like to be long. If this doesn't hold, or we just basically destroy this area, the next zone would be like this. But let's not get ahead of ourselves. That would be 19,300s. And on the continuous chart, we can see there's a lot of volume down here. So below this pivot, which is the 4 hour fair value gap, there's no volume. So if we start seeing lower, we are most probably going to accelerate during this area. So be really careful. So the plan for next week is basically try to find some kind of the 50% more or less, the 600s. into basically this, and if not, second option would be this area of support around 19,300, something like that. And let's see what happens. We have to be really patient more than ever. We have had 2 weeks of pretty bad price action. We came from equities rollover, futures rollover. We went through options expirations. Now we are seeing political, macroeconomic turbulence. I mean, it is what it is. If we want to dedicate ourselves to this job, we have to be patient and we have to understand what is happening and why we might be in the start of a new cycle of weakness. It is true that July is the most bullish month of the year, but I mean, we have to see the price action. We have to see that higher time frames are really putting a lot of money into shorts. So it's difficult to trade in this environment, but I think that we have to really follow the price action, form our bias, and really understand what is happening. And I think what is happening is after Friday's sell-off and all the other signals that we saw, let's see what happens today with the election in France, and let's see what happens with Biden, because the market is really suffering right now. It took a big hit on Friday. Let's see if we see continuation. There are certain levels that are pretty key, and let's see the reaction there. So that's all, folks. If you found this video useful, please give it a like, support the channel by subscribing. This is a weekly recap. I tried to do this on the weekends during summertime. I might be late a couple of days, but here we are doing the weekly recap on a Sunday, because this week has been pretty tricky, pretty difficult. So don't beat yourself. Try to leave to trade another day. Be really careful, because if you are bullish, I gave you a couple of reasons why we have to really be careful. On the long side, we have right here a structure that looks bearish and a couple of levels that we might see reaction, but manage your risk, because next week I think is going to be key for the rest of July. The first week after big election, after the US presidential debate, there will be a lot of things happening next week. So remember that discipline, patience, risk management are key for your success, for your survival in these markets. And that's all. Enjoy your weekend, enjoy your Sunday, and see you tomorrow, Monday, in a new week. But do your own analysis and try to be prepared as always. So stay safe, everyone, and see you tomorrow.